Hi, I'm Donna Batten with the Institute of Internal Auditors, and I'm here today interviewing Chris Wright, a Managing Director with Protiviti. Thank you so much for joining us today.
It's great to be here with you, Donna.
So we will be talking about the revenue recognition standards today. So given that we were talking a little bit about processes, are there any controls that are vulnerable to breakdown that people need to be aware of with the new rules?
Well, Donna, when you consider the 5 steps, determining whether or not you have a contract should be pretty straightforward. Determining what the overall price is should be pretty straightforward. But then when you get into determining whether you're delivering more than one thing, or a good and a service, or a good, a service with a warranty and some post-contract support, there is risk in whether you make that determination correctly and to what extent you understand fully what you're delivering so that you know that you've delivered it and can recognize revenue. So there's one risk there. Then the second risk is allocating the purchase price. Let's say it's $100 for all of that. How do you break that $100 down between the good and the service so that you can recognize revenue at the appropriate time? So that's subject not only to error, but also to manipulation because it's judgmental. And so you have a heightened risk of fraud when you introduce judgment into a standard that used to have a lot more rules than judgment. And so the auditors need to be on the alert for that as well.
Yeah, it seems to me that it would be very prudent of organizations to focus on what the process would be during this transition. Maybe not to wait and see so much, as you said, not jump ahead too much, but to really focus on the process and have internal audit be involved.
Yeah, I think this situation clearly, if anything does, calls for a diagnostic. Companies should really diagnose how this will apply to them and their books of business and their ways of doing things and the products and services they deliver, the types of contracts that they have, so that they're in a position to come to a conclusion. Even though there's judgment in the accounting standards, there should not be subjectivity in the ultimate determination of how they plan on following the rules. So while the companies may have choice in how to adopt the standard, they shouldn't allow that choice to float down into the organization so that the people on the line are making those choices daily. They should have a fully formed rule set of their own, which then allows them to ensure compliance.
Well, I think one last thought would be, what is the impact with the audit committee, whether it's internal audit's role, communications with the audit committee? What should the audit committee be asking, or will they ask, or what should be told to them?
Well, so a couple of things come to mind. A lot of audit committee members are on other boards. And so the chief audit executive should be mindful of the fact that the chair of their audit committee may have been exposed to this elsewhere and have questions for them. They should be ready for those questions. If they haven't brought it up, they should be, as the key interface between the company and the audit committee, leading the audit committee to taking up that consideration. There are some things about the standard that require decisions to be made. The standard can be adopted retrospectively or prospectively. And that's a big decision to make. Most companies for which the standard will be substantially different will probably elect to do it retrospectively rather than misrecognizing revenue, which would otherwise be caught in a cumulative catch-up. But management and the chief audit executive and the CFO shouldn't be taking for granted that that's what the audit committee wants them to do. It's a pretty key consideration, and depending on their audit committee charter and how they plan on operating and how they're supposed to operate as a company, they may be required to get the audit committee to weigh in on that, and that's the sort of thing that should be done sooner rather than later. Again, running the risk that you could be doing too much too soon or too little too late if you don't ask and don't get the audit committee's views on that. The audit committee should be educated on the process. This should be an agenda item for every audit committee, every quarterly meeting between now and the time the standard's effective, so that they can give progress reports. And the audit committees will be asking for that before long. It's really a good idea for the chief audit executive to bring that up and to be the catalyst as opposed to the question answerer, to be the person suggesting what the questions and what the agenda should be.
Well, I am looking forward to those conversations taking place, and I want to thank you so much for joining us today and providing us with your insights, and I appreciate your time.
Happy to do it, Donna. We're happy to be part of the conversation.
Thank you.
Thank you.